Yesterday, we had one of the most brutal days on the traditional markets ever. I mean, just look at the map of yesterday. And if you look at the 𝗂𝗂𝗂, which is a NASDAQ, you can see that from top to bottom, the NASDAQ was actually down 5% yesterday. And that, of course, has a contagion effect into crypto. Now, the reason why I'm talking about the NASDAQ today and traditional markets, which I don't normally talk about, is because the reason why the NASDAQ is down and the traditional markets are down could be a big reason for crypto to go down. And if I'm right, there is actually only one chart that matters for the entire TradFi market and for the crypto market. And today we're going to dig into that chart, and I'm going to explain to you how important this chart is, and I'm going to show you the risk to see whether we're at risk of a contagion into the stock markets and into crypto, or whether we've actually seen the bottom. So big Friday banter today. Let's go, guys. Let's do this. It's another one of these sideways, another one of these red days, but the Bitcoin price is still actually moving sideways. We're still actually in that range, 64,310. And to be honest, I was actually pretty surprised that Bitcoin held up as well as it did. It did go down to about 62,300 yesterday, but I see we're back in the range, and we're almost back above this green line over here, which kind of means that we're actually showing relative strength relative to the markets. Today is Friday. On Fridays, we have a big banter today. As I promised you, I've got a very big guest here. I've got 𝗬𝗙𝗧𝗏 here. He's going to help us break down exactly what's happening on the markets. He's going to also help us break down the most important chart in crypto. And I did break down a thesis on Twitter. I don't know if you guys follow me on Twitter. If you don't, you should be following me on Twitter at CryptoManRun. But there is only one chart in the world that actually matters today. And that chart is this USD JPY chart. So let me just do it for you like this so you can see it correctly. It's the USD JPY chart. And what you can see on the USD JPY chart is that the yen is continuing to strengthen. Now, why is this chart the most important chart in the world, not only in crypto? I wrote a thesis about it today on my Twitter. And it says, this is the most important chart in the world today. It's the chart of the Japanese yen versus the US dollar. Why is it so important? Because for 30 years, Japan had no interest. And so as a result, people went and borrowed Japanese yen with no interest, and they invested them in risk assets abroad. They invested them in T-bills. They invested them in the NASDAQ. And the problem is that for the first time in many years, the Japanese government decided to raise interest rates, and they raised them by 0.25%, which is very aggressive. Now, what happened then was that people started to unwind the yen trade. They started to take back all the risk assets to repay their loans in yen. Now, the problem is that there's an estimated $4 trillion locked up in this trade. And if the entire trade unwinds, then there's going to be a major unwinding in risk assets. Today, we're going to talk about this unwinding with 𝗬𝗙𝗧𝗏. We're also going to talk about the risks that it could have to the crypto market. And then we're going to talk about how insulated the crypto market is and what your next move should be. So today's a very important banter. Before we start the banter, you know that our Friday banter is, of course, brought to you by our best sponsor, NordVPN. And as I always say to you guys, we are going to make a lot of money in this bull market, and we don't want to lose the money that we make. Now, there's two ways that if you lose money trading, great. If you lose money in leverage, okay, great. If you lose money to a hack, or if you lose money because the government confiscates your money because they see your IP address and they see where you're at and the hackers know where you are, there's no excuse for that. And I know that a lot of you have been sitting on the sidelines and still don't trade through a VPN. I think if you're in crypto and you're not masking your IP address, the only one word that I could use to describe you is you're an absolute idiot. And the reason why is because you're in this game to make money, and you pay $3 a month to hide your IP address. And if you do that, you also get a free eSIM. Now, for those of you who don't know what an eSIM is, it means that when you travel, you can basically just roam using your mobile phone without getting a new SIM card in that country. Do me a favor, just get a VPN. If it's the only thing you do in crypto, it's the most important thing that you do in crypto. Once you got the VPN, I don't know how many times you've clicked on malicious sites. Let me tell you, I am an expert in crypto, and I've clicked on malicious sites, and I've almost input my wallet address. Get Nord threat protection, because what it does is it shows you the malicious sites. It protects you against the malicious sites, and it can potentially save you a whole lot of money. Anyway, now with the formalities out of the way, let's get into the order of the day, the business of the day. And that is, of course, looking at the Bitcoin chart. Been moving sideways now for 155 days. We kind of need to get direction one way or another. Let's go up or let's go down. And I wonder what the next move is. We need to get direction. I see Arthur's here and he's laughing. Arthur, just tell me, is it up or down next? That's all I need to know. It's been 155 days of torture. Fucking hell.
Up. Fucking up. Going up.
Okay, now tell me why you're so bullish about up. I mean, I want to hear your view. I've got obviously some views, but I kind of want to hear your thesis as to why you think it's up.
So obviously, in the Northern Hemisphere, people with money go on vacation in June, July, and August. So nobody with any buying power, decision-making authority is left on any sort of trading desk that it does any real size. And if you've done well in crypto, is your ass going to sit around at home, I don't know, looking at your screens, or am I going to find you in Ibiza, right? So pick one. So people are not trading, they're glancing at the news, whatever, stuff's not going on. Come September, October, November, we've got a rocking sort of schedule of some stuff that's going to fuck up the world, right? And in crypto, we love chaos. We're all about chaos, whereas TradFi is all about minimization of volatility to unnatural levels. And so we have so many things happening this fall, and I'm very, very bullish. And especially something that I've been digging into for the past 2 days is the quarterly refunding announcement from the US Treasury and its implications for money and how it's going to be printed into the second half of this year.
Okay, so let's break all of those down. You said that in the last quarter of this year, we've got a whole lot of catalysts. Let's go through what I think the catalysts are, and then maybe help me to see if there are many other catalysts. The first catalyst that we probably will have is we'll probably have rate cuts, because as Powell came out yesterday, he was pushed yesterday, and eventually he kind of said, okay, in September we're gonna get the first rate cut. The market's pricing in an 86.5% chance of rate cuts. So you think that rate cuts are one of the first?
I don't think the Fed cuts.
You don't think the Fed cuts at all?
No, I do not. And I'm in the camp of, if you look at nominal GDP and real GDP growth since over the past like 18 months, everybody's been saying recession, 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 and job market's bad. All these different things about the US economy that they're saying points to some sort of recession. And every quarter growth is strong. Why is that? Because the federal government is committed to spending enough money to keep people doing stuff. And as long as the federal government is going to spend money, and Janet Yellen at the Treasury is going to print these bonds to fund the government, GDP growth will be strong, inflation will be above target. And so I think Powell is in a rock and a hard place. Of course he wants to cut rates. That's the Fed's job. Create financial market growth, wealth inequality, all that kind of stuff, right? He wants to cut rates and make everybody happy that rates went down. But inflation is above the target. The Democrats are in power. Biden, before he became a super duper vegetable, he's still a vegetable before, he told Powell, hey, get that inflation under control. It's your job. And so that's Jay's job, get inflation under control. They're still above target.
Just to be clear, you're saying no rate cuts at all this year, because the market's forecasting 3 rate cuts this year.
I do not think there'll be a rate cut. Maybe there'll be one in December after the election. I don't know how many meetings there are after the election, 1 or 2, but I do not believe that there will be a September rate cut before the election.
So how do you think the market responds in September when there's no rate cut? Like, how do you think the market, the risk markets respond when there's no rate cut and there's an 86.5% expectation of a rate cut?
Well, I think as CPI data comes in above target, that percentage will decline. And as you start seeing more Fed officials waffling, saying, oh, data dependent, depends on the economy, depends on this, depends on that. Like, I haven't read too much into the press conference from last night, but I don't believe Powell was like definitive saying, yes, we will cut rates in September. It was more like, if things progress in this kind of manner, then we may cut rates. Well, growth is strong. Every quarter, ripping GDP growth. Inflation is above your target. The economy does not need lower rates.
The unemployment rate is not where it needs to be for a rate cut. So I think I do agree with you. I kind of put my number on 1 rate cut this year. because I just thought that they were being very optimistic to think that Powell's just going to walk in there and cut 3 times in a row after not having cut for 5 years. I can't see him cutting 3 times in a row. So if that's not your catalyst for Valhalla, then what are the catalysts that happen at the end part of this year that send us to Valhalla?
So I think people have been trapped in the 2008 to 2020 regime, which is the reign of the central banker. Ben Bernanke, Janet Yellen, Jay Powell, Christine Lagarde, Garuda, all these motherfuckers all around the world, right? They reigned supreme because this was the era of quantitative easing, central bank dominance, money printing, all that kind of shit, right? We've moved on. COVID happened, and Western governments, especially the United States, rediscovered what it means when the government issues stimulus and banks lend money. What happens? Ripping economic growth, people going out and buying things. Yes, it's fleeting and it will dissipate at some point, but people were happy. They were out spending money. They had jobs. Americans are traveling all around the world. Why? Because the government is spending money. The banks are lending to businesses and they're doing stuff. That didn't happen during QE. All QE did was move money from banks, from the Treasury to the Fed. It sat in reserves and it just pumped financial asset prices, which didn't benefit that many people other than financial industry titans. And so that was 2008 to 2020. And as traders, what do? We hung on every single word of every single central banker. Now, moving back to America, if Jay is not the most powerful person in Pax Americana, who is it? It's Janet Yellen at the Treasury. Now, we've seen since September of 2022, when the reverse repo hit a high of $2.5 trillion, it is now at $400 billion. So that's almost $2.1 trillion of liquidity injected into the asset markets. And I guess this is just going to be a chart that I'm going to put in my next essay. So this is why it's top of mind right now. I charted the decline in the reverse repo against Bitcoin. When did Bitcoin bottom? It bottomed in Q3, Q4 2022, as reverse repo injected all that liquidity, all that dollar liquidity into the markets. Bitcoin moons from 16,000 to whatever it is, 65 to 70,000 dollars right now. That is primarily responsible the response of what Janet Yellen did, which is increase the amount of Treasury bills that are debt securities with a maturity of less than 1 year with no coupon into the market. And money market funds, who held all this money at the Fed, said, I would rather earn a 5 to 10 basis point increase by buying a Treasury bill, which is just as good as cash, buying it from Yellen versus keeping my money at the Fed. And once you move that money from the Fed's balance sheet and to the broader economy's balance sheet using T-bills, you inject dollar liquidity that can be multiplied throughout the global financial system. And as a result, asset prices ripped, even though the Fed has not cut rates. They haven't raised rates, but they haven't done anything for the last 18 months.
Well,
right?
They have been tightening for the last 18 months because they haven't cut rates, but they have been tightening you could say they've been tightening on the market, tightening liquidity on the market. But your explanation makes sense as to why, despite the tightening, but despite the global liquidity or the US liquidity cycle going down, you've all of a sudden got this spike in risk assets, namely NASDAQ, stock markets, and even Bitcoin.
Exactly. And so what we need to look at is what Janet and the Treasury tell us every quarter about what they're going to do with how they're going to issue debt. Now, US marketable debt is at about $27 trillion right now. The Fed's balance sheet is, I think, 8-something trillion. So a 1 percentage point movement in the Treasury's debt balance versus the Fed, that tells you who's more important. Janet is more important than Jay. She determines how much liquidity is in the market, and she will run a steamroller over any policies that Jay has to constrain inflation. Case in point, in the most recent announcement, which happened, I think, last night, this week, there was two reports released, and Janet has told the market that they will issue about $270 billion worth of T-bills. And so we can assume that a 1-for-1 basis, $270 billion will be removed from the reverse repo and injected back into the financial markets between now and the end of the year. But she's not done. they've instituted a buyback program. Now, what is a buyback program? The Treasury will buy illiquid, off-the-run, longer-dated Treasury debt securities and fund those purchases by issuing more T-bills. As per the Q3 report, we are told that up to $30 billion worth of buybacks will occur. So another $30 billion of liquidity injected by Janet. Janet, is she done yet? No, she's not fucking done yet. She has a Treasury General account. $750 billion is sitting in this account. Because the debt ceiling will kick into effect on January 1st of 2025, by law, the Treasury is allowed to run down the TGA to zero to avert or forestall a government shutdown, when the Treasury is no longer able to issue debt to fund the government. And so Janet can run this balance down. That injects another $750 billion of liquidity into the markets right in time for the election to help the Democrats win. So I estimate that between $300 to $1 trillion of liquidity is coming between now and the end of the year. And this is all based on what Janet Yellen and the Treasury Department are doing over and above whatever Jay does at the Fed. So the Fed's definitely not going to hike rates, but I don't care if they cut rates. It doesn't matter to me.
The Fed is in inverted commas independent, right? Like the Fed is not Democrat and not Republican. How does the Treasury work? Is the Treasury aligned to the Democrats officially?
Well, Janet Yellen was appointed by Joe Biden. She is Joe Biden's woman.
Okay.
And
so she wants to make sure the Democrats win. So she's going to get everybody. She's going to take every last cent that she's got in every single one of her different wallets. She's going to spend it like a crazy person before the elections. People are going to walk into the elections completely drunk and say, hey, times have never been better. This is the roaring 30s or whatever you want, the roaring 20s. Times have never, ever been better. We must vote for the Democrats again.
Exactly.
Now, let's quickly just jump to this discussion around Kamala versus Trump. So I've been watching the poly markets because I think that poly markets is a reasonable gauge. Trump was kicking her ass, and now she's starting to catch up to him. So Trump was at 65% to her 30% at one point, and now he's on 55, she's on 43. Trump had a very bad week this week. He had a very, very bad interview this week, and that's, I think, what took the markets down. You said if Kamala isn't the nominee, Trump is even money to win. All the crypto bros are going to be sad pandas if they just blew their load and their champion losses. Are you convinced that if Kamala runs, that she actually beats Trump?
I think I was in the camp that Trump would wipe the floor with Kamala. I have changed my opinion. I think that she could definitely win this election. And I think she's an absolutely atrociously bad politician, but that doesn't matter.
Why? What made you change your tune that she could actually beat Trump?
Well, so I have a few friends that are a lot more in the weeds on this kind of stuff, and the polling data that they're looking at seems to suggest that in the battleground states, it's even money for Harris. And again, what does she have going for her? She's a woman. She's not Trump. She's a Democrat, and she's picked your minority, whatever room she's in, she's at. And so that appeals to a certain part of the American electorate. And she's not going to get on TV and not at least be able to string some words together. Now, the shit she says out of her mouth is completely incomprehensible, but that doesn't matter. And so if you think about Trump's probability of winning, he was at his highest after the assassination attempt and that disastrous debate by Joe Biden. There was no other way for him to go but down. Any other candidate they replace Joe Biden with is going to do better than Joe Biden. And so the Democrats are going to rally behind that person because he's not a senile vegetable. And so I think Trump's chances of victory peaked a few weeks ago. That doesn't mean he's not going to win, but I'm a trader. I don't care about the actual facts. I care about the probability of it happening and how the market's going to react to that.
If Kamala wins, what happens to Bitcoin and crypto? Because Trump's gone out fully pro Bitcoin, pro crypto. He seems to love Bitcoiners, and we know why he loves them. He loves them because they have money and because they're smart, and he believes that you need smart people with money backing you. But he's kind of been one of the trades that's turned Bitcoin around. The Democrats have a bad track record. Yes, on the surface, apparently Kamala's people have been reaching out to crypto companies to try and build a bridge, etc. But we kind of know that Kamala means probably 4 more years of Gary Gensler, probably 4 more years of Elizabeth Warren in some sense or another. How does that make you feel about your crypto investments? How does that make you feel about Bitcoin, about altcoins?
So it makes me feel this way. So I'm increasing risk in August as people are scared and they're like, oh, I've had 150 days of sideways or whatever it is. You know, they're being a bunch of pussies. So I'm buying risk now because I'm confident in the September and October being very liquidity positive in terms of injections by Janet at the Treasury. And so I think that's going to be an awesome, 2 months. As you get closer to the election, I'm going to be reducing risk into that, sell into strength. And so as we move over the election period, it's complete chaos. I don't know who's going to win. If Trump wins, great. The Bitcoin markets seem to have ascribed, Trump with positive things happening for crypto. I highly doubt that, but whatever, that's what the market believes. If Harris wins, it's more of the same. But at the end of the day, both the Democrats and Republicans are campaigning on the same platform, which is, I'm going to print some money that's paid for by everyone else but you, and then I'm going to do something for you. And the Republicans are going to cut your taxes, and the Democrats, I'm going to give you some more government welfare. And choose your side, it's the same thing. At the end of the day, whoever's in charge of the US Treasury is going to be issuing more debt to fund a higher fiscal deficit. And so it doesn't matter who wins the election. But the period between November to when the debt ceiling is resolved sometime in probably January or February could be a bit choppy for crypto, and I'm just going to sit that out. And once the debt ceiling, charade ends, then what do I know is going to happen? That money spigot's going to get turned on, because next thing that a politician who just won is looking at is, okay, well, my party is coming up with a midterm election in 2026, and I want to extend the gains that I got at this presidential election, so I better make sure that economy is humming along. And what does that mean? Print the motherfucking money. And so it doesn't matter who wins the election. Your crypto is going to go up, but if you're over leveraged in a period of downturn, then you could get shook.
Okay, so I mean that's pretty interesting. That's a pretty interesting take. Let's go a little bit more internationally. So you've spoken a lot about US liquidity. US liquidity seems like it's going to be amazing, absolutely crazy. But there is one chart that is worrying me a little bit, and I'd love to hear your take on this chart, and that is this US dollar Japanese yen chart. You can see that obviously the yen strengthened quite a bit against the US dollar because of 2 reasons. 1, market intervention, but 2, that they raised their interest rate cycle. A lot of people are now commenting that this cash and carry trade could actually unwind. And the cash and carry trade being that people borrowed in yen at 0 interest rates, invested that money into risk assets, thinking that there's going to be 0 interest rates. And now all of a sudden interest rates are going up, and the cash and carry trade starting to reverse. Now, I wasn't a big follower of that, but then I saw this chart over here, which is pretty interesting. So this is the NVIDIA chart, and this is when the NVIDIA chart started to go down, and this is when the yen the intervention started, and the yen started to strengthen. And if you do a QQQ chart, which is the NASDAQ chart, let me just quickly get us a QQQ chart. So that's the QQQ NASDAQ. And you look at when we started to get the downturn in the NASDAQ, exactly on the 11th of let me just go to the daily, it just makes it easier. But exactly on the 11th, when the yen started to strengthen, right, the NASDAQ started to correct. Walk me through this Japanese cash and carry trade. How big is it? How serious is it? The reason why I ask is Japan has been a major provider of world liquidity, global liquidity. Are they going to start tightening? Are they going to start raising rates? Walk me through how this trade plays out.
Yeah, so the Japanese yen exchange rate is the most important macroeconomic indicator in the world. I know a lot of Americans like to think that they're special and exceptional, but no, the Japanese and the Chinese determine American monetary policy on the margin. And so what has happened with Japan over the past, since World War II, they got atomically bombed, and the US came in and started loaning them money and said, we're going to open up our export markets so that you guys can help contain China and Russia from on the Pacific side. And so Japan boomed. They had an amazingly stable market in which they could export stuff to. They restricted anyone else from selling stuff into their market, and they ran a mercantilist economic policy textbook. And they accumulated close to $3 trillion worth of assets around the world. So Japan Inc., so if you think of corporate Japan, private households and the government, is probably collectively, on a per capita basis, the richest nation in the world because of what they own. And so Japan has a monster carry trade on. They issue yen, they print yen, and then they take that yen, they FX it, and they buy tech stocks, US real estate, US bonds, French bonds. So they own all this stuff. The problem with that is that now that the yen has depreciated so much from like 100 to 160 over the past sort of like 18 months, the ordinary Japanese person is like, what the fuck? What's this inflation thing? Why am I paying more for stuff, for energy, for rent? Wages are going up. And so there's a lot of political pressure in Japan to fix this weak yen. And so the BOJ has finally been browbeaten into starting to normalize. That was the meeting this week when 𝗬𝗢𝗓𝗏 basically raised rates by 25 basis points and hinted at this tapering of bond purchases over time. The problem is that the BOJ would go massively insolvent if bond prices collapsed, if they weren't there manipulating the market and purchasing them. So what do they need to do? They need to find the people with the money to come and buy the bonds. Who has the money? Japanese corporates, Japanese insurance companies. What do? You say, okay, repatriate that money back to Japan. I'm going to start normalizing rates. So you're going to get a better rate in your home currency of yen. Don't do this carry trade anymore. Unwind that carry trade. Take that capital, sell those tech stocks, sell those US Treasury bonds, sell those French OATs, take that money and bring it back to Japan and put it in the banking system and buy these Japanese government bonds. That is the big trade that's going to happen over the next 5 years. This is the start of it. It's going to be volatile.
That sounds like a crazy risk for risk markets. I mean, if they own $3 trillion worth of assets, probably all offshore assets or majority offshore assets, you're talking about an unwinding of a $3 trillion transaction. That means $3 trillion worth of stocks, Bitcoin, property, etc., unwinding to bring yen back into that could take down risk markets completely. Or am I reading it wrong?
That's exactly what will happen. Except that what will happen if the US and Europeans decide, okay, well, if the Japanese are exiting, then what do we need to do to fill the gap? Print the fucking money. Exactly. And so that's kind of what I've been arguing in the few essays that I've written about Japan this year, is that the reason why that exchange rate is so important is because as Japan strengthens their currency and repatriates all this capital they've accumulated over the past almost 100 years, the West is going to have to step up and print money to fill the gap. Otherwise, their financial markets are going to collapse. And so what does that mean? That means maybe the Fed does a QE. There's all sorts of different ways in which you can create this liquidity.
What would the catalyst need to be in order for the Western world to start printing the money? Because Western world don't print money unless there's a catalyst, aka 2008 housing collapse, aka COVID, right? That's when they really start printing. So what would need to happen for them to say, oh shit, this Japanese trade is unwinding, we should print money quickly to fix it? Something needs to break, right? And what worries me is that they'll only fix it when it breaks, and it will only break when the Japanese reversal of the Japanese cash and carry trade crashes the market.
So I would say as treasury yields get towards 4.5%, if tax receipts are starting to come in extremely light because tech stocks are not performing, but it's not as if Janet and Co are not cognizant of this risk. They have been extremely accommodative as we have progressed through this cycle post the unwinding of some of the COVID nonsense, right? So the Treasury stepped up big time by issuing T-bills to drain the reverse repo of $2 trillion. The next big pot of money, and this is something I'm writing about in my next essay, is I believe that the Treasury is going to try to convince banks to move their banking reserves at the Fed off the Fed's balance sheet and purchase more T-bills. They don't want to purchase longer dated Treasury bonds or notes because there's a lot of risk in that, and they already blew up, in March 2023 on that trade. So this time they want a near cash equivalent with a higher yield than what they're getting paid on the reserves at the Fed. There's $3.3 trillion of excess reserves. There's no reserve requirement anymore for banks. That was abolished in COVID in March of 2020. So theoretically, not that I think this will happen to this extent, The commercial banks could get coerced to buy T-bills by whoever is next at the Treasury. We'll take the money from the Fed, so banking reserves go down, and that juices markets further. That provides the bank's liquidity to finance purchases of treasuries. On the other hand, the Fed might not like that reserves have gone down. They operate under they want to have the most ample reserves policy. That's been the policy since 2008. We're going to have so much reserves that there will never be any problems in the money markets ever again. So if they see the Treasury fucking them over by offering these T-bills at a higher rate than the interest on reserve balances, and reserves are falling, how does the Fed generate more reserves? Quantitative easing. They go back to buying government bonds, which is exactly what the Treasury wants them to do. They want the Fed, under their independence, to print money and buy long-term Treasury bonds, especially the ones that the Japanese are selling and will continue to sell for a very, very long time. So it all kind of fits together in terms of forcing them to do things they'd rather not do because inflation's at whatever it is, 3, 5, 6%, pick your number. It's above their target. The Fed would rather not have to, taper QT. Why are you tapering QT? Your fucking balance sheet is $8 trillion. Why are you reducing the pace of which you reduce it? It doesn't make any fucking sense if inflation's above your target. So they've already started to realize that they're cornered. And so we'll slowly start to see piecemeal this liquidity being injected into the markets to replace what's being withdrawn by the Japanese. And, next up could be the Chinese as well. They own $1 trillion, if not more, of foreign assets that they also need to repatriate because they're not in the best shape either.
Wow. Okay. So, but I must say, I'm a little bit more concerned than you sound around this Japanese trade. I just think that the process of unwinding the Japanese trade might be a very painful process. I just don't think
it should. It might be very painful if you are highly leveraged and you're not watching things correctly. It could be, someday the yen gaps in 150 to 130 because some big player in Japan decides to repatriate a bunch of capital. The markets take that as risk off. Boom, you get dumped and you get liquidated. But
when they decide to repatriate a bunch of capital, I'm just scared that they say the capital that I'm repatriating is all these investments that I've got in NVIDIA, Facebook, Amazon, Microsoft.
Exactly.
That's going to destroy the NASDAQ. That's going to, that would cause a NASDAQ meltdown.
Exactly.
NASDAQ meltdown, very bad for risk assets, very bad for Bitcoin, very bad for crypto.
On a short-term basis, yes, but we know the response. We know the response is to print money.
Okay.
COVID was very bad for Bitcoin, right? Bitcoin went down 50% in a day. A lot of people were able to buy at those great prices because they knew what was going to happen. Print the money. When something bad happens, yes, those who are over leveraged get destroyed, but those who have cash on the sidelines, who have good risk management, are able to take advantage of those opportunities because they know the response. The response is always printing money.
Okay, so I think we've covered the macro, and I think I get your macro view. I get both sides of the macro view. Let's go a little bit more back down to crypto, and I specifically want to talk around ETH. So we've got the ETH ETF now. We've got the ETH ETF now. ETH is still trading like a stable coin. There's still outflows out of this GBTC equivalent of ETH, which is called ETH-E. Still outflows out there. How do you think Wall Street starts to view ETH, and how bullish are you on the ETH trade?
It's the internet bond, the internet computer, all the same narratives, right? And so I'm bullish, right? The marketing machine of BlackRock is one of the best marketing machines you've ever seen, right? It's got distribution, it's got the appearance of intellectualism and all these other things. You have the whole university system and the whole world promoting these notions of how you're supposed to invest your assets and the proper types of person you're supposed to give your money to. That's BlackRock. Okay, maybe the first month or two of the launch isn't at what people expect in terms of asset inflows or price appreciation of ETH, but Larry Fink is completely behind marketing these products. These are the best performing products in the history of exchange traded funds, and BlackRock has made a name for themselves on exchange traded funds. So if you don't think that he's going to, or him and all of his other cohorts of these other asset managers are not going to engage the herd of their sales force and continue to push them to get assets into these products, then you're retarded. So okay. I'm just fine. The price might not go where you want it to go in the short term, but I'm fully, as someone who used to work in finance, I understand how the marketing machine works. It takes a while for things to move, But once you get that set in, the money just keeps flowing in. It's just automatic.
Okay, so listen, this is the ETH BTC chart we're looking at. I mean, I don't have to draw trend lines for you because I think you're smart enough to see the trend lines. If you had $10,000 to invest, you could invest in one token. Your holding period is 2 years. Are you investing in Bitcoin or are you investing in ETH?
Ooh, probably go Bitcoin.
What's the thesis? Why Bitcoin over ETH?
Because I believe that we're watching the meltdown of the sovereign debt market and a complete change in the global monetary, economic, and political order. And so I want to own the money, the best form of money ever created. ETH has different properties. It's a different use case. And so I would bet more on Bitcoin than ETH, even though ETH has a lower market cap. And so it's easier for it to move higher.
Okay, now I'm going to show you another chart. This is the Sol ETH chart. The Sol ETH chart looks like a different chart. It's about to break the all-time high. If I were to give you $10,000 to invest, 2-year time horizon, ETH or Sol, where do you put your money?
Ooh, ETH. And they're going to throw a curveball here because okay. I think that Solana is going to get flipped by Aptos.
By Aptos? Obviously, I mean, I did see that you were speaking at their event, but okay, let's talk about, first of all, why. So you think Solana is going to get flipped by Aptos?
Yes, you give me a 2-year time horizon. I think in 2 years, Solana will be flipped by Aptos.
Okay, why Aptos?
So, at Maelstrom, we advise a myriad of projects, and we said, okay, we want to advise sort of like a new L1 come up. Who's going to be on the come up, right? To sort of get that narrative, got the buzz. So we looked around, we did a lot of research. The team met with a lot of founders of different projects, and we really liked the team at Aptos. Mo, who's the guy who runs it, super impressive individual. Come out of Facebook.
Let me challenge you a bit. So I did the same thing, and I think Solana wins. Just for the record, I think it's not about technology. It is about network effect.
Let me fucking finish. I don't give a fuck about technology. I'm about to tell you what really is better. I'm not gonna talk about fucking TPS or some fucking like move bullshit. I mean, yeah, it's nice tech, but it doesn't fucking matter.
So tell me the thesis of why you think Aptos is the winner.
So my thesis on why Aptos is the winner is I think that Aptos is going to trade on a narrative that no other L1 is really capitalized on. And that is TradFi institutions doing public blockchain stuff, Web3 stuff. Now, we've always had this dream that, what if XYZ Bank use a public blockchain to issue all their products and blah, 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 right? And that kind of got thrown by the wayside for the last probably like 5 to 10 years as people were in this distributed ledger technology and permission blockchain, all that bullshit like R3 and all these dumb fucking projects that were like basically selling like dog shit to banks. Great. You guys got a nice salary, but your product sucks. Banks and these financial institutions finally realized, I think, that if you're going to do something on chain, it needs to be a public blockchain. And so then the question is, which one do you choose? Sorry?
Subnet on Avalanche, like the California DMV did, or like JP Morgan
did. So I think that financial institutions are going to migrate to using Aptos because Aptos has signed a few deals with a few different institutions, and I can't tell you that now because I'm not sure if I'm supposed to say the names. I will at my presentation in September, so obviously come to Korea and see me. But
I will be there. Just for the record, I will be there.
So I think the partnerships that Aptos has launched will be able to remove the career risk from using Aptos as your preferred public blockchain, right? Because think about it, you're some muppet who works for a financial institution. You're an overpaid idiot. You don't want to lose your job, but your boss said choose a public blockchain. Okay. If you're the first one making that decision, it's a very hard decision because you make the wrong decision and you fuck up. You're fired. You're not getting another job.
You do the third. If you do it as the third or the fourth, then hey, I just follow the other guys.
Exactly. And so I think that Aptos, via a few partnerships with very leading institutions, will have established that there is zero career risk from taking your financial institution and using Aptos as your Web3 blockchain. And so that's the core thesis. And as you get different types of financial products that drives transaction volume drives gas fees, and then you just model it out, right? And that's the game. I don't think Solana has that narrative. Solana is the meme coins, the GameFi, all that sort of stuff. But we've had those narratives for a while, and so
what do you think? What do you think of meme coins? What do you think of the meme coin buzz and what's happening on meme coins? Just I mean, are you invested in meme coins? Do you play the meme coin market?
I got some dog with that. I got some Dogecoin. I love meme coins. I think they're an expression of.
You got the hat behind you. I see that there's a dolphin with.
It's a whale.
Well.
It's a whale.
Yeah. So I mean, okay, but to me, the meme coin casino has become the most fun part of crypto at the moment. I mean, you can get in and out. You can trade whatever you want. Like, it's fun. It feels to me like it's a massive, unregulatable casino. It's why people came into crypto. People came into crypto for number go up. No one gives a fuck about technology, except maybe 5 people that give a shit about Bitcoin. Meme coins, completely illiquid, which is amazing because it sends the number up and down very, very quickly. Can be launched by anyone. Can be played by anyone. Like, have we not created like the world's biggest casino? Is this not just the world's biggest casino now? And is Solana not the platform? Is Solana not the backbone for the world's biggest casino?
Well, I mean, I don't know that I haven't looked at the specific transaction volumes on meme coins and how much they've contributed to like fees as a percentage of the whole on Solana. So I can't really say like
let me give you one number. Let me give you one number. This week, Pump.Fun made more fees than any other protocol in the world, which is one protocol on Solana, more than ETH. So one protocol on Solana called Pump.Fun made more fees than any other protocol in the world. So the fees are real. And I mean, I don't know if it translates into that much in Solana fees, because Solana fees are very, very, very low. But in terms of like revenue generation, the meme coin game is generating a lot of fees. It's just an unfair, rigged game because it's not really about memes. It's about following insiders and whether you can catch the coin that the insiders got in before anybody else, and whether you can get out before the insiders try and dump.
Yeah, I fully get the meme coin thing. I have no problem with it. I think it's great. It proves what I tell a lot of projects is like stuff needs to be fun. You need to activate users. That's what Solana is very, very good at. That's why it's worth so much money, because that ecosystem is very good at activating people doing fun things. Now that's fine. Now the market already gives you a value doing that. So to go even higher, then you just got to do it that much more or find a new narrative. So it's more about a forward-looking thing versus, yeah, I agree with you. They're crushing it on meme coins, but I'm talking about.
But that's in the price. You're saying, look, meme coins, yeah, but meme coins is in the price. Okay, so listen, we don't have much time, but I do want to touch with you on other narratives. I know you're fucking bullish on Athena. You've told me a million times. I'm obviously extremely bullish on Athena, especially now that the Bybit thing is real and you can start, using Athena to trade against pairs and actually earn Athena yields whilst trading on leverage, which is, I think it's a fucking game changer. Tell me some other narratives that you're bullish on. Every time you come here, you give me some narratives. You gave me Filecoin at token 2049 last year, and that exploded. Obviously, it's come down with the rest of the market. What else are you looking at? Because you seem to be able to see around corners.
I mean, honestly speaking, probably the most thing I'm excited about is Aptos flipping Solana. In terms of other narratives, I think we're almost done with the liquid restaking. We have EigenLayer coming up in September, unlocking. There's going to be some other competitors out there launching stuff. I'm an advisor to one of them. I think we'll talk about that more when it happens. But at the end of the day, I think the peak of EigenLayer has happened. There's going to be some other people trading in that space. That might be some interesting things to trade this fall. And then I think it's going to be about the majors. Yes, there's going to be some specific altcoins, but it's going to be about Bitcoin, ETH, Solana for a time, because it's a very liquid, high beta Bitcoin and ETH trade vehicle. I like to trade it because it moves a lot and it's liquid. I think that is playing into the macro narrative about what's really going on. Again, I think there was a lot of capital destruction with the FTX, Three Arrows, debacles, and a lot of people haven't recovered yet. And so I think, yes, Altcoin is going to come around.
They are getting back $10 billion end of the year.
Yeah, so that it'll happen. Definitely, alts are definitely going to moon. It's just going to be, I think, a little bit harder than people think. Everyone's like, oh yeah, it's always you make all your money in alts. Well, maybe this cycle it isn't. You make all your money in alts. The majors is where people really did really well because there's a Bitcoin, ETH, and Solana ETF providing a structural bid, even if markets really go to shit. Versus a lot of altcoins are down, 75, 80% from the highs in April, right? So I think the market is changing. That's not to say that there's not going to be new narratives in the altcoin space that are going to be very interesting. I just think that we've hit peak narrative on a lot of these things. The good projects are going to trade well, but I think, the second and third project in a particular vertical are going to be finding it very, very difficult to earn back that retarded FDV that they launched at.
Amazing. All right, so I think we're aligned on most points. I mean, it's been amazing to have you on the show. Always like full of alpha, and always just a fun discussion. I'm going to see you in Singapore on that crazy night when you've promised me a big party. So
our fucking party. I'm sorry for everyone that's climbing over walls and whatever last year, but we fixed that shit. I'm in control 100%. No Muppets around. This shit's party is going to be fucking rocking.
Last year, and I'm going to add a video of the party to this. But last year, I had to climb over a wall because they said that it was too full. And I tried to get hold of you, but obviously 1,000 people were trying to get hold of you. And when I got in, there were no more drinks. They were like, there was no more drinks.
The hotel cut us off. They were pissed off. They're like, get the fuck out of here. What are you guys doing throwing this party? So there's some issues. We're going to fix those.
You can make it up to us this year. But it's been so good to see you. I'll see you in Sing. We'll chat again soon, my friend. And to you guys, I will see you guys again on Sunday because we're going to do a meme coin show. And let me tell you, it is a dirty meme coin show. I've got like some real dirty calls for you. I'll see you guys again on Sunday. Until then, trade well, my friends.